All right, so might as well just go, just get on go mode. So the title of this episode is going to be it's bonus depreciation versus section 179. Now these are business related tax terms that we're going to further discuss. But as you can see on the screen, I've got the Rich Dad Radio Show with Robert Kiyosaki. In this episode, we just gonna kind of go through this with them first before I dive into the title. So, and this is rather important because it's definitely connected. I just want to show you how these guys do it. You know, these are more of the videos that I would like to see when I was first learning and when I was first trying to figure all of this stuff out. It's like I had to do so much really to just be able to get it. You know what I mean? I had to law library, study law books because you really was not getting any genuine information. Everybody was just regurgitating um, talking points that really just kind of, kept you on a hamster wheel, right? All right, so let's just kind of dive right in to these guys, and I'm gonna show you, better than I can tell you. Let's just dive right in.
Hello, this is Robert Kiyosaki, and I'm excited and happy to be talking about Rich Dad's World, but more about real financial education. Because as most of you know, our schools teach us nothing about money. And a very important part about money is a subject called taxes. And since we don't study money at school, if you really studied it, you would find out that for money to exist, taxes have got to exist. And I'm going to say some things today that'll disturb some of your true blue patriots out there who think that paying taxes is patriotic. That is the biggest lie told to people. That when people look at the real formation of the United States of America, it was really founded in 1773 with the Boston Tea Party, which was a tax revolt. And if you look at it from that point of view, what I'll say, what I'm going to say, and my advisor and my educator on taxes, my mentor is Tom Wheelwright. So if you have real red, white, and blue blood coursing through your veins and you think paying taxes is patriotic, your blood may turn cold right now because you've been lied to. So anyway, quick history here. Um, Taxes can only exist unless there's debt, and the US dollar is debt. And the way they get that money back is via taxes. And so a true capitalist, and I just finished this book here, if we ever get some paper to print it, it's called the Capitalist Manifesto. And it talks a lot about taxes because real capitalists don't pay taxes. And so it's going to be an interesting program. This is Rich Dad's World. We don't want you to do anything illegal because you don't. Because you don't, if you know what you're talking about. But as you know, I'll say it again and I say it again. Our school system teaches us nothing about money. And if you really want to understand money, you must understand debt and taxes.
Okay, guys. And with that being said, I just kind of want to regurgitate some of the things that he's talking about. About the rich not paying taxes, and a lot of people were kind of bent out of shape about Trump. A lot of people have been out of shape about a lot of the corporations that allegedly, pay little to no taxes, or a lot of the people that run and manage the corporations pay little to no taxes. And that is the goal when you're on the right side of business. When you're on the right side of business, people, the government incentivizes you The government provides you an incentive to not pay taxes. And they do it, it's a simple, they do it through tax write offs. They give tax breaks, you know, to those that are in certain industries or, you know, just for various reasons. But one of the main things is you have to have the financial education and you have to have the financial literacy to know how to be structured in order to be able to gain or to capitalize off of these things. So we're going to continue because Robert Kiyosaki and his lawyer, they give up a whole lot of gems. You know, this video is definitely going to be a couple of hours, so we're going to be in the trenches with it. I'm going to definitely get it done. We're going to be in the trenches with it. And you're gonna gain a lot from the video. So I'm gonna mute my mic, stop talking, and we're gonna jump right back in.
Because in 1913, the Federal Reserve Bank was created. The Federal Reserve Bank is not federal, it has no reserves, and it's not a bank.
Now, did you hear that? That's funny, right? The Federal Reserve is not federal. It has no reserves and it's not a bank. See, I know when y'all hear a lot of the, you know, a lot of people on YouTube when they speak these things, a lot of, you know, the first thing go, a lot of antennas go up and they think conspiracy, oh, conspiracy, this. But wait until you get further into the video because I have definitely already watched some parts of it and he hit the nail on the head with a whole lot of things. And so y'all know Robert Kiyosaki, he hang with the greats, Warren Buffett's. You know, he's definitely a rich man. And this is how these people are living. Now you have some people who are wealthy and who know this vast wealth of information, but they continue to lead people astray. You know, a lot of those people are a lot of the motivational sellers, you know. They show you all the private jets and, you know, they're European and you know, I won't just say any names, but you guys know who I'm talking about. And also, these videos are for educational purposes. I do claim fair use under the Copyright Act of 1976. That disclaimer will actually be posted at the beginning of the video as well whenever I do the upload or re upload the video. But let's dive right back in, man. These guys got a lot of game, and you got to understand. And the good part about it, and the reason that I'm going over all of this with you, people, the reason I'm going over all of this with you is because you know, I can definitely educate you and lead you and point you into the direction that these guys are giving knowledge on. And also, after we are finished watching them, I'm gonna go over and I'm gonna break down the bonus depreciation versus the versus Section 179. So you guys will kind of understand that a little bit more as we go through this video. All right. Let's get back on it. I'm gonna get better and better at this. I'm really, really for to start doing it, y'all. I'm telling you, I really do um need to do this more so that I can get my followers up. And speaking of that, man, y'all like, subscribe, and do all of that stuff. I got to get on top of it. I got to get you know, I'm gonna watch some more of these YouTubers so that I can kind of get the lingo down and say a lot of the things that need to be said so that I can build my following up and all of those things. But I be so busy, you know, working and then I got kids and so it's a lot that's going on. But I'm gonna complete each video, even if it take me, you know, the weekend or whatever. But I had to go snatch up a job because I just, you know, I want the social media thing to really, really take off. I know it can, but I really had to sit down and be committed, you know, to providing you guys a lot of this good knowledge. And then y'all will see where my head at. Y'all will know what the deal is. But let's jump right back in to what he got going on.
And also what was created was the 16th Amendment. And the 16th Amendment allowed there to be taxation. So when you look at history, you'll see 1913 was a pivotal year. So all you red, white, and blue communists out there who think that paying taxes is patriotic, get my book here, The Capitalist Manifesto, because what I'm going to say today will make some of you go nuts, because I make millions and millions and millions of dollars and pay no taxes. And when you understand that, I do it legally. So if you really want to have an education about money and finance and financial education, it's about debt and taxes. So with that, my guest today is my personal tax advisor. He's my educator, he's my mentor, and he's my go-to guy before I do anything, because I refuse to pay taxes legally, and you don't have to pay taxes if you have a great advisor like Tom Wheelwright, who is my advisor. So Tom, welcome to the Rich Dad World program.
Thanks, Robert. It's always good to be here, always good to be with you, and always good to be talking about taxes and how to be patriotic and not pay taxes instead of being patriotic and paying taxes.
It's interesting, isn't it?
It really is, because the reality is, for some people to be patriotic, they have to pay taxes. The E and the S, pretty much they have to pay taxes. If you're an employee, self-employed, superstar, if you're going to be patriotic, you do have to pay taxes, but you're just being a silent partner with the government, basically. Whereas if you're, like the rich, like you, Robert, if you're really contributing the most to the economy and the most to what the government wants done, you actually end up paying little to no tax, because the tax incentives overwhelm the amount of tax that you'd pay otherwise.
Right.
Robert Kiyosaki is the best-selling author of Rich Dad, Poor Dad, a 10 Roberts free virtual wealth building event. Claim your free access now at richdadfree.com. Go to richdadfree.com.
So let me show you this. This here is book number 2 in the Rich Dad series. It's called the Cash Flow Quadrant. So E stands for employees. So you go to school, they tell you go to school.
I had to say this real quick. I don't like how Robert slid in those commercials on me, but it's all good though. It's all good.
Get a job. But if you're really smart like Tom, you become, S stands for super smart. You become accountants, attorneys, and doctors. So Tom, who pays the most taxes of these characters here?
Oh, definitely the S, definitely the super smart. The more degrees you have, the more tax you pay.
Thank God most of your friends, Tom, are like me, C students. we didn't qualify for this one here.
That's for sure.
You educate all of us that as a general rule, and this is worldwide too, this is not just US.
Right.
And so Tom and I have traveled the world, and employees pay about 40% in taxes.
That's right.
Anything to say about that? I mean, that's worldwide.
That's a pretty standard rate worldwide. It's going to be anywhere from 30 to 50%, but on average 40%. If you make any kind of decent wage, you're going to be up in that 40% range.
Correct. And if you're a doctor, lawyer, self-employed, or like somebody says, I'm going to quit my job and start my own business, you become a small business owner or a specialist. I'm going to be a web designer. How much of these guys pay in taxes here?
Well, they can get all the way up to 60% in tax, because they're paying not just the employee share, they're paying the employer's share as well. So they pay 2 taxes, employer and employee.
So that's what happens when people quit their job and start their own business without talking to Tom first. Okay, so B stands for big business, which is, according to the tax code, 500 employees. But B also stands for brand. Right. And most people don't build a brand here. So big business, like the big corporations, how much do they pay?
Typically around 20%.
20%. And again, what Tom instructs people and advises people It's because we're doing what the government wants done. So why would the government give a tax break to big business?
Well, because that's where the jobs are, right? So one of the government's primary goals is to create jobs and employment. And so the big business doesn't pay the taxes. In the B quadrant, it's the E people who work for the big business who pay the taxes.
Right. The government needs people to hire these people here.
Correct.
And so if you hire a lot of people, they'll give you a tax break for that. And then I stands for investor, but it's an inside investor. In other words, over here, lots of people invest, but they invest in a 401k or an IRA. They invest in public market, like stocks, bonds, mutual funds, ETFs, which I don't have any of those things. I don't want them. But over here as an insider or investor, how much do they pay?
Well, they're the ones who get down to zero and pay zero tax.
So if you enjoy being over here, you can tune out right now. But if you want to find out how to get over here, this is your program, especially here, Rich Dad's World, and they'll explain to you how you can get over to this side here.
Okay, so I want to pause and I want to chime in on what he's been saying up to this point. So if you'll look at the quadrant, on the left side, he's got the E, which stands for the employee. They tax at a 40% tax rate. When you're working, when you go get a job, even if you're a business owner and you're a sole proprietor and you're paying your taxes if you're paying your taxes on a 1040, right? Even if you own an LLC, right? And you're in its default status, right? Meaning that it's acting as a pass-through entity, and any money that the LLC make, you're paying it on your 1040. You are literally still over on the left side of the quadrant in that 40% tax bracket, right? And then when you jump down to self-employed, for those who I just mentioned, you're actually in that 60 percent tax bracket, right? Because if you got employees, now you actually got to pay the employer tax and all of those things that were mentioned. Now, as to offset that, some people may have, taken advantage of the S Corp. But still, at the end of the day, you're still on that left side of the quadrant because even the S Corp is a pass through entity and you're still in that 40% tax bracket. And like he was just mentioning, how do you get over to the other side? Now, they've pretty much mentioned big business, right? And I'm sure in this video that they're going to further break down what I'm about to say. But this also can apply to the small business owner, to the individual that owns the LLC that's still allowing it to act in its default status. With the right financial education and the right financial literacy, you too can also be on that right side where you're in that 20% bracket. Now, when he's talking about investing, right, the I where they pay zero taxes, which is amazing and which is where we all can be if you just get the right financial literacy, you make the right business decisions, you have the right goals in mind, and also you're benefiting society. You're providing jobs. You're investing. You're providing. Even if you're providing places for people to live, places for people to have a business. All of those things are incentivized by the government. So give you an example. Let's say you own a hair salon and you're over on the right side. You got the right financial literacy, the right financial education. Now you're over on your right side. You're in that 20% bracket. Well, let's say you take the profits that you make from the company and you invest, right? You invest. Now you're in that position to where you too can also pay zero taxes because when you invest, you're going to acquire debt. And you're going to acquire good debt. You're going to acquire the type of debt that's going to actually bring money in. You're not going to go out and acquire debt that you're going to have to pay or that you're going to have to pay out. You're going to go acquire debt that's going to make you money, right? So you may go get some real estate. You may buy your building and then lease out office space. All of these are investments, which also put you on the right side, right? So we're gonna continue. We're gonna check these dudes out. Just keep watching, and then we're gonna dive into my portion of what I really want to chop it up with y'all about, which is bonus depreciation and Section 179 expensing, which is part of the game to pay zero taxes. All right, so keep watching. And I'm new at this, so just bear with me. Where I'm trying to go. There.
Because you can do it legally. And this is a funny thing that Tom and I talk about. Who cheats the most on taxes, Tom?
Oh, absolutely the S.
These guys
S quadrant.
Mm-hmm. They're the biggest crooks. Every time I go into a small, a sole proprietor or something like this, and they said, if you pay cash, we'll give you a break. When they say, well, you pay cash, what does that mean, Tom?
They're saying they're not going to report that to the government.
How else do these guys cheat?
Well, they take deductions for all their personal expenses. They don't record their information properly on their book. Some of them have two sets of books, one for the tax man and one for themselves. So it's just that's what they do because they don't know any better.
And that's what Al Capone did, didn't he?
That's how he got caught.
So the biggest crooks are on this side here. No, this side. And the legal guys are on this side here. So Tom, would you mind giving us a little of your background? What qualifies you to say such blasphemous things?
Sure. So after growing up in Salt Lake City, Utah, and being a Mormon missionary in Paris, learning how to get rejected in French, I spent a couple of years at the University of Utah to get my undergraduate degree in accounting, and another couple of years at the University of Texas to get my master's degree in accounting, specializing in tax. And I spent 7 years with Ernst & Young, one of the largest CPA firms in the world, 3 years in their national tax department. I spent 4 years as the in-house tax advisor for a Fortune 1000 company, 14 years as an adjunct professor in the Masters of Tax program at Arizona State University, 25 years buying, building, selling CPA firms, and now run a network of CPA firms around the world. So I've been around the block a few times, Robert, and you and I have been around the block a few times together, frankly.
And it's really funny because we travel all over Asia, America, Europe, Africa, and everybody comes up to us, no matter which country we're in. And this is pretty universal. Okay, these guys are capitalists, and these guys work for money here.
Right.
I'll give you a definition for a capitalist. A capitalist commodifies labor. I'll say it again. A capitalist commodifies labor. So a capitalist will hire employees or hire accountants and attorneys and make money off of them.
That's right.
And that's why they get the tax breaks. But no matter where we are in the world, at the end of every event, people come up to you and say, what?
You can't, it's great information. You just can't do that here.
No matter where we are.
Doesn't matter.
We'll be in California and they say,
you can't do that here.
We'll be in South Africa and they'll say,
you can't do that here.
We're in Moscow. What do they say?
You can't do that here.
It's really funny.
And that's exactly how my people be sounding. My people be sounding the same way. We can't do that, man. You can't do that. That's illegal. You can't do that, man. All of this is perfectly legal. You just have to have the right financial literacy and you have to have the right financial education. All right, you have to. It's a must. It's paramount that you do, guys. All right, it is paramount. Um, so what I'm gonna do, I'm gonna put these gentlemen on pause for a minute, and then I'm gonna just kind of touch on um some of the things that I was gonna talk to you guys about um with the bonus depreciation versus Section 179. Now, it's a lot of people. So there are some people who will know exactly what I'm talking about, and there are some people who will definitely be clueless. Okay, so bonus depreciation and IRC Section 179 expensing, both are tax incentives provided by the U.S. government, right, to encourage businesses to invest in capital assets, right. So let's talk about bonus depreciation a little bit. All right. So some of the benefits of bonus depreciation are accelerated depreciation, right? And accelerated depreciation, which is a term you need to know, it's where bonus depreciation allows businesses to write off a significant portion of the cost of qualifying assets immediately in the year of purchase. Now, this could provide immediate tax benefit and improve your cash flow. So that's one hell of a benefit, right? Then it also bonus depreciation also stimulates investment, right? By allowing businesses to write off a large portion of an asset's cost in its first year. It incentivizes companies to invest in new equipment, property, which stimulates economic activity. All right. Another benefit is enhanced cash flow, right? Enhanced cash flow. Now, this policy it helps businesses preserve cash flow by reducing the tax liability in the year of purchase, which can particularly be beneficial for small and medium sized businesses. Also provides flexibility for new and used property. The Tax Cuts and Job Act, also known as TCJA, it expanded bonus depreciation to include both new and used property, providing an additional incentive for businesses to invest in pre-owned assets. Another benefit, applicability to a wide range of assets. Now, bonus depreciation is applicable to a wide range of tangible property, including machinery, equipment, computers, even certain types of building improvements. Also, even intellectual property as well. All right, so Section 179. All right, so some of its benefits immediate deduction for qualifying assets. Section 179 allows businesses to deduct the full purchase price. All right, the full purchase price of qualifying assets in the year they're placed into service up to a certain limit. All right, also, Section 179 is simple and easy to use. Now, this provision is straightforward and it's easy to apply. It simplifies tax reporting and record keeping, making it particularly beneficial for smaller businesses. It also provides flexibility in asset choices. Now, unlike bonus depreciation, Section 179 can be applied to a broader range of tangible property, including off the shelf software, certain real property improvements, and even some non tangible assets like air conditioning and heating units. All right, so limits for total deductions. There are annual limits on the total amount of assets that can be expensed under Section 179, and they can vary from year to year. Also, there's a potential to offset business income. The Section 179 deduction can be used to offset income derived from the business, potentially resulting in a lower overall tax liability. Now, I'm going to dive deep. All right. We're going to do some deep diving into bonus depreciation and Section 179. And it's going to be very beneficial for you. I'm going to provide you guys with an overview of the bonus depreciation rules and the expensing rules under the Section 179 for qualified business property. before and after the passage of the Tax Cuts and Jobs Act. All right, so the Tax Cut and Jobs Act, it made significant changes to the bonus depreciation rules and the expensing rules under the IRC Section 179 for qualified business property. Businesses generally have two ways to take an immediate tax write off for part or all of the cost of acquired business property. A business can claim a deduction for a percentage of the cost of the business property, which is bonus depreciation, or can claim a deduction for a certain dollar amount of the cost of the business property, which is Section 179 expensing. Now, under the bonus depreciation rules, y'all, a business could take a larger first year bonus depreciation deduction for certain business property. All right. Now, that could be found at under Revenue Code Section 168K. All right. Now, the TCJA temporarily increases the first year bonus depreciation percentage from 50% to 100% for qualified property acquired and placed into service after September 27, 2017, and before January 1st, 2023, with the expensing percentage phased down for the property placed in service from 23 to 26. After the TCJA, full expensing under the bonus depreciation rules generally applies to both new and used property acquired by the taxpayer. Again, a way to incentivize using, pre-use or acquiring pre-used assets. Also, the TCGA significantly expanded Section 179 expensing rules. Under Section 179, a business can elect to expense the cost of any qualified property and deduct it in the year the property is placed in service. The TCJA increased the maximum deduction from $500,000 to $1 million for property placed in service in taxable years beginning December 31st, 2017. It also increased the phase out threshold from 2 million to 2.5 million and expanded the types of property that are eligible for the deduction. Now, often the same business property qualifies for bonus depreciation and Section 179 expensing. And so this is kind of where you just have to, decide what method to use, or you may choose to combine methods. And again, this is where you will seek the advice of your CPA or your attorney to be able to help you make those decisions. Okay. Now we're going to discuss again the bonus depreciation rules and Section 179 expensing rules before and after the passage of the TCJA. Now let's talk about depreciation. The depreciation rules allow or require a business to spread out the cost of long-term business assets over the life of the asset, right? The most common way to depreciate a business asset is by spreading out the cost evenly over the asset life, and this is called straight line depreciation. Now, depreciation generally starts when a taxpayer first uses the property in its business or for the production of income. It ends when the taxpayer takes the property out of service, deducts all of the depreciable costs or basis of the property, or no longer uses the property in a business or for the production of income. A business generally can depreciate most types of tangible property, including property such as buildings, machinery, vehicles, furniture, and equipment. A business can also depreciate certain intangible properties, right? Such as patents, copyrights, and computer software. However, land is not depreciable. Again, land is not depreciable. Now, to qualify for depreciation, an asset generally must be property a taxpayer owns, be used in the taxpayer's business or income producing activity, have a determinable useful life, be expected to last more than 1 year. Now, property is not considered depreciable if it is put into use and disposed of in the same year. All right. Now, what is bonus depreciation? So bonus depreciation under IRC Section 168K is an accelerated method of depreciation that allows a business to take a larger first year deduction for the cost of qualifying property in the year in which the property is placed into service. Bonus depreciation, therefore, is a valuable tax saving tool for businesses. Now, bonus depreciation only applies for the first year the taxpayer places the property in service. Property is placed in service under the bonus depreciation rules when it is ready and available for its assigned function in a business. A business does not need to actually use the property in its business during the year to take depreciation as long as the property was ready and available for use in its intended function. All right. The bonus depreciation rules automatically apply in that case. However, taxpayers can elect out of the bonus depreciation rules for the taxable year that the qualified property is placed in service on a timely filed tax return. If the election out is made, it applies to all qualified property that is in the same class of property and placed in service by the taxpayer in the same taxable year. A taxpayer, therefore, cannot pick and choose which specific properties it wants to write off under the bonus depreciation rules. It's a one size fit all, one go, all go. You know what I mean? You know how like when mama said when you was little, shit, if one of you fight, all of you better fight. So it's one of those instances you can't, pick and choose. You can't do that. All right. So now, if a business takes a bonus depreciation deduction, the remaining cost of the business property, if any, can be deducted over several years using Section 179 expensing or regular depreciation. Now, let's talk about before the TCJA, the Tax Cut and Job Act. Let's talk about before that. Now, before the TCJA, the first year bonus depreciation deduction was set at 50% for qualified property placed in service from 2015 to 2017, scheduled to be reduced to 40% in 2018, 30% in 2019, and to be eliminated in 2020 and beyond. So this deduction, the bonus depreciation deduction, is not a set in stone rule. It does have an end date, but Congress can extend it. All right. So, and again, this was before the TCJA. So, before the TCJA, business property qualified for bonus depreciation only if it had a useful life of 20 years or less. This includes all types of tangible, depreciable personal property, such as your vehicle, office equipment, heavy equipment, machinery, anything acquired by purchase. But it does not include real property or land. It does not include real property or land. All right. So, um, you know, also, before the TCJA, business property qualified for bonus depreciation if it was new property, if it was purchased, from an unrelated party. For example, the property could not be acquired by gift or inheritance. Before and after the TCJA, there are special rules for listed property. If a business asset qualifies as a listed property, it must be used more than 50% of the time for business to qualify for bonus depreciation. Listed property consists of automobiles and certain other property that can be used for both business and personal use. Now, all of that was before the Tax Cuts and Job Act. All right. Now, after the Tax Cuts and Job Act, the TCJA increased the bonus depreciation percentage from 50% to 100% for qualified property acquired and placed in service after September 27, 2017, and before January 1st, 2023. The bonus depreciation percentage for qualified property that a taxpayer acquired before September 28, 2017, and was placed in service before January 1st, 2018, remains at 50%. The amount of allowable bonus depreciation is then phased down over 4 years. It'll be 80% for property placed in service in 2023, 60% in 2024, 40% in 2025, and 20% in 2026. And the bonus depreciation rules expire January 1st, 2027. So again, therefore, the rules are only temporary, that sunset unless Congress extends them. All right. Now, the TCJA expands the definition of property eligible for 100% bonus depreciation, which is a good thing. That means that they've added more properties that you could 100% write off, to include used qualified property acquired and placed in service after September 27, 2017. The inclusion of used property is a significant and favorable change to the bonus depreciation rules. And the requirements for used property are that the taxpayer or its predecessor did not use the property at any time before acquiring it. The taxpayer did not acquire the property from a related party. The taxpayer did not acquire the property from a component member of a control group of corporations. The taxpayer's basis of used property is not figured in whole or in part by reference to the adjusted basis of the property in the hands of the seller or transfer. Also, the taxpayer's basis of the used property is not figured under the provision for deciding the basis of property acquired from a decedent. Also, the cost of the used property eligible for bonus depreciation does not include the basis of property determined by reference to the basis of other property held at any time by the taxpayer, for example, in a like kind exchange or involuntary conversion. The TCJA also added qualified film, television, and live theatrical productions as types of property that can qualify for 100% bonus depreciation, as long as the property was acquired and placed in service after September 27, 2017. The rules discussed above for listed property continue to apply. Under the TCJA, certain types of bonuses, or pardon me, certain types of property are not eligible for bonus depreciation in any taxable year beginning after December 31st, 2017. One exclusion from qualified property is for property primarily used in the trade or business of the furnishing or sale of any of the following: electrical energy, water or sewage disposal services, gas or steam through a local distribution system, transportation of gas or steam by pipeline. Now, this exclusion applies if the rates for the furnishing or sale have to be approved by a federal, state, or local government agency, a public service or public utility commission, or an electric co op. All right, so the TCJA also adds an exclusion for any property used in a trade or business that has had floor plan financing indebtedness if the floor plan financing interest was taken into account under IRC, the Internal Revenue Code, Section 163J1C. Floor plan financing indebtedness is secured by motor vehicle inventory in a business that sells or leases motor vehicles to retail customers. Because of drafting errors in the TCJA, qualified improvements to non-residential real estate made after December 31st, 2017 temporarily did not qualify for 100% bonus depreciation, and in many cases were depreciable over 39 years instead of the intended 15-year period. Now, however, the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, corrected the error retroactively to the date of enactment of the TCJA, meaning that qualified improvements to non residential real estate placed in service after December 31st, 2017 and before January 1st, 2023 are generally eligible for 100% bonus depreciation and are otherwise eligible for a 15-year depreciation. So, I mean, you guys probably got a lot of money on the table and don't even know it. You need to get in where you fit in, speak with a tax attorney, speak with a competent lawyer that could put you on track with all of these things and help you recoup your monies. All right, because again, a lot of you may have to change business structure. See, a lot of you 98%. I'm telling you right now, I know the majority of the people that's probably gonna this video will reach. Y'all doing the soul prop thing. You're bootstrapping your business, you paying for everything, you have a LLC, you're able, it is such a flexible tool, you don't even know what you got. Especially with doing business, all you need is the proper financial literacy. Y'all gonna have to go down that road. You're gonna have to go down that road, and I'm telling you, you get the proper guidance, they gonna bust your head. But you get at me, I'm telling you, I got you. One-on-one mentorships. No prices. I'm not gonna discuss any of that. All you have to do is inbox me about a mentorship. In regards to financial literacy, to put you on the B side of things. Um, I'm telling you, it's amazing. You guys need to come over to the other side. Now, my mouth getting dry. I'm gonna end this portion. I'm gonna end the video. Listen, if y'all want more of this good information, man, y'all need to chime in. Find me. Like this video, subscribe, man. Make me want to keep pumping this shit out. I got a ton of good information. I got a ton of knowledge. You know what I mean? I don't need to be on here talking to myself. This is pre-recorded. I'm gonna let it run. I'm gonna definitely post it. I think it's even a way that you can go live with pre-recorded video, and then I could be down in the comments watching right along with y'all, answering any questions or anything like that. Yeah, we're gonna do that, man. I'm trying to get in the loop, but I need to know that there's people out there that really desire this information. The zero taxes, being able to function on the B side of things of what Robert Kiyosaki was talking about, to be in that 20% bracket, that 0% bracket. All of us can do it. It's available, it's accessible. I got the roadmap. You got to get at me. I'm not gonna bust your head because I'm not now one of these gurus. I'm not a fool. I'm not none of that. I'm a God fearing individual. I'm a supreme being, as you can see what my new title is. You know what I mean? That's my new moniker. That's what I'm rocking with. You know what I mean? And the game that I got, the knowledge that I got is superior, above, and beyond anything that you're going to ever get your hands on, especially for the cost that I'm putting it out there at. Yeah, it's going to be a little mentorship, but I promise you, it's going to be bona fide, legitimate information. Everything is going to be lawful. Everything is going to be legal. All of the guidance that I'm going to provide you, and none of this, okay? Now I'm going to say it again. I have to say this because there's a lot of haters out there. None of this is legal advice, okay? I can, the scrivener clause do apply. I can provide y'all with financial literacy. I can provide y'all with financial education. I could teach you the roadmap. I could teach you how to get there. What I cannot do, all right, and what I refuse to do is give you any legal advice about any specific information or any of those things. So please do not contact me asking me or saying, "Hey, I got 50,000," or "Hey, I got 100,000 over here in whatever fund or in the bank or savings or this investment or that property. Can you tell me what I need?" No, no, you cannot come at me like that. That's like I can't even really put it into words. That's just taboo. That's a no-no. That's something that I cannot do. I cannot provide you legal advice because again, I'm not an attorney. All of this is for educational purposes. They some say entertainment because I do have playing their videos and stuff like that. So, it's for entertainment and for educational purposes to be able to, deliver you guys some information. But the knowledge I have is second to none. I study the law books. I'm a member of several law libraries, law indexes, and that sort of thing. So, we're going to give it to you raw. We're going to give it to you exactly how you need to have it. And any type of um, mentorships that are done, it's going to be perfectly legal. All laws will be cited always, all the time. The roadmap will be there. You'll see it. You'll know it. Um, you know, it's just going to be a beautiful thing, and especially with your foundations. A lot of y'all foundations are very, very shaky. A lot of your foundations are very, very shaky. You guys need to let me educate you on the proper business structures, really, to even be able to take advantage of bonus depreciation in Section 179 and that 20% and that 0% that Robert Kiyosaki is speaking about. You have to be structured a certain way. Again, financial literacy is the key. But not only be structured that way, but when you're structured that way, like the big corporations, you have to behave like them. So you have to be able to learn all of those things. The mentorship will include all of that: how you behave, how you act, how you manage your company as a corporation, all of the do's, all of the don'ts. It'll be educating you on all of those things. And it's going to be very, very, it's very detailed and it's very thorough. But then that way you'll be able to, there is so much that you could take advantage of. A lot of you will, a lot of you can, but you don't even understand the government, the IRS is your best friend when it comes down to business. And just like Robert Kiyosaki and them was saying, the crooks are those that are the sole proprietors. I mean, you really got to think about it. It's, man, I used to work for credit card processing company, right? Some years ago, I went to go do some telemarketing, and I would be calling the business owners and, it's trying to sell them credit card machines, but, the where they, no, I'm not taking credit cards. I take cash only. Uncle Sam, they always talk about how they don't want to have to pay the government. I mean, this is a true statement that they really are. The sole proprietors really do try to figure out ways, skirt around having to report this and to report that. And y'all know I'm not lying. It gives you that flexibility to cheat. And over here, who y'all think cheating, they not the ones cheating. You know what I mean? It's like it's so weird, it's so crazy. But yo, I'm for to jump off. I'm in this video, man. I'm trying to find my groove and my style on her. You know what I mean? Because I really want to come do this. I really want to be a powerful force for the truth, for the law. See, everything I stand on, is just I'm standing on the law. I got law books right now with me right now. $1,000 books. You have to invest. Go invest in the law library. Invest in these books. Invest in these things that's going to get you a solid footing. Man, we're going to talk about a bunch of things: trademark, copyright, patents, intellectual property. We're going to talk about um, investing in real estate, just so many different things just over the course of whenever. But I need to support. I need y'all support. And it ain't even got to come in the form of no kind of money because I ran up and had to go grab me a job for that. But I do got my Cash App scrolling across there. I know a lot of people don't trust Cash App, but you can find many other ways. You ain't got to do nothing but hit me and say, hey, bro, how can I support you? If that's on your heart. I'm not asking, but if it's on your heart. But also, definitely support, man, by sharing the video. I know I don't have none of this type of stuff up there, but it's gonna get better. Share the video, like the video, subscribe to my YouTube channel. I only got about 25, 26 subscribers. Right. So I'm gonna try to, I'm trying to do better, man. I got just so much to give. Look, if I didn't have, when I wasn't working and I was just doing my business, if I could have even got support with my business and all of those things where I didn't have to work, I would really have time for all of this kind of stuff. And I want to give it to y'all for free because guess what? YouTube gonna pay me. If I give it to y'all for free, y'all watch my subscribers and all that grow, man. I'm not greedy like that. You know what I mean? But on the flip side, if you need my personal time, you want a mentorship, then you can get that too. And it's not, I'm not gonna even bust your head. Nothing like what these people doing. We could spend 3 hours, of good solid 3, 4 hours at one setting for a set fee, which is not definitely going to even be into four figures. And then from that point forward, hopefully you'll enroll in one of my in my membership through my Pickup Game University, where you'll be able to always contact me, reach out, have support on different things that you got going on. So, I'm trying to get it to that point, trying to really do it like that. But at the same time, if it ain't no cash flow, then it ain't no go. You know what I mean? That's just what that is. So I had to go back and be a modern day worker. And we know what the modern day worker is, right? Menial wages, right? Not even enough to really live off of. But it's cool though. Support the broadcast, support the channel. If you see any of my stuff floating around, buy it. Even if you don't want to use it, spend some. All right, I'm out. We're gonna get better at all of that.